This report is from today's CNBC Daily Open, our international markets newsletter. CNBC Daily Open brings investors up to speed on everything they need to know, no matter where they are. Like what you see? You can subscribe here. Asia stocks mixed. Asia markets were mixed Thursday as investors assessed Japan's spring wage negotiations. The Nikkei 225 and Topix gained as markets priced in the prospect of the Bank of Japan tightening policy. Overnight, Wall Street also ended mixed, dragged down by tech stocks as investors await key updates on retail sales and producer prices. The S&P 500 and the Nasdaq Composite slipped 0.19% and 0.54%, respectively. The 30-stock Dow, on the other hand, added 0.1%. EV hype may be over. The euphoria around electric vehicles is waning. Ford Motor, General Motors and Mercedes-Benz are some of the major automakers that are scaling back or delaying their EV plans. This comes as the sector sees lower rates of growth and a slower pace of adoption than previously expected. Palantir CEO on backing Israel. Palantir CEO Alex Karp said his outspoken pro-Israel views have caused staff to leave the company and that he expects to see more walkout. If you have a position that does not cost you ever to lose an employee, it's not a position, Karp said in an interview on CNBC. House passes TikTok bill. The U.S. House of Representatives passed a bill that could lead to a ban against TikTok if its Chinese owner, ByteDance, doesn't sell its stake in the popular video app. The bill now heads to the Senate where it faces steep hurdles as senators are divided over the legislation. Pro-China stocks worth the risk. Chinese stocks are a risk worth taking, said Jason Shu, chairman and chief investment officer of Ralliant Global Advisors. He noted they are trading at the cheapest, while offering a big discount, and sees huge opportunities to play the market. American consumers started the year on shaky footing, but a bounce back could be in sight. February's retail sales data will be in focus today and should bring insight into the state of the U.S. economy. Economists expect consumer spending to rebound strongly after January's sharp retreat. Even as we anticipate a moderation in spending this year, we believe the January slowdown somewhat overstates the near-term pullback in consumption. Households are still benefiting from a real income tailwind that should remain supportive of spending in the near term, Wells Fargo wrote in a note. We expect to see a rebound in February spending and forecast retail sales advanced 0.8%. Consumer strength has underpinned overall economic growth and has proven far more resilient than most policymakers and economists predicted. Yet, sticky inflation could take a toll and risk growth prospects ahead. The case for a gradual but sustained slowdown in growth in consumer spending from 2023's robust pace is persuasive, wrote Pantheon Macroeconomics in a note.